This week's crypto recap. Is your crypto safe? Considering the latest in the Ledger security incident. Are the United States pivoting too soon and changing their interest rates? And we'll give you an update on the latest Bitcoin ETF news. We cover all this right here and now with Matt and Nick from the Collective Shift team in our weekly recap. Actionable insights and a breakdown into the market, all in under 30 minutes. As always, we'll start with the market update with Matt, followed by the US pivot. So Matt, in the last week, what have the markets done? What do we need to know?
Yeah, cryptocurrencies sort of slid a bit lower over the past 7 days. Bitcoin was tracking or trying to get its ninth consecutive weekly gain, something that hasn't happened in well over 6 years. But it fell just short of that, ending the week down about 6% or so, and ETH down about 7%. So yeah, it was really, I think a lot of people were sort of calling for a bit of a calming down in what has been an extremely strong rally throughout October and November and even in early December. So yeah, a bit of a breather for the crypto markets. And yes, I still am very confident moving into 2024. It'll be, a very positive year for crypto. And on these down weeks, I think it is worth remembering that Bitcoin is up by well over 100% year to date. So yeah, definitely not too fussed about a bit of a pullback there. But yeah, looking forward to getting into a big reason for driving the risk on assets, particularly last week. Crypto was down by even more than that during the week, but it wasn't until the Federal Reserve had their latest policy decision and their press conference that risk on assets, including cryptocurrencies, sort of rebounded towards the end of the week. So, Nick, I'll hand that over to you to kick us off.
Yeah, thanks, Matt. This was probably one of the biggest news items in the last few months in terms of the macro environment. We saw the US Federal Reserve come out in their final meeting for the year, just put continually halting any rate hikes. So they're keeping their funding rate in that interest rate at about 5.25 to 5.5 target range. So I think this was the third meeting in a row where the rates weren't increased. And this sort of indicated that we may be seeing an end to the rate hikes that we saw in the last couple of years, which really made waves because we were seeing interest rates hike at the fastest pace, I think, on record. So a lot of the market, I think, saw this as a sign of relief and potential catalyst that we may be seeing a pivot or a changing of this attitude of, higher for longer, or, these interest rates that finally might start to come down. They also estimated that we might see about 325 basis point rate cuts in 2024. And Jay Powell, he notably said that, quote, "We are likely or near at the peak for this tightening cycle." So I think it was a main reason why crypto boosted a bit higher, and I think traditional markets notably surged up higher following the announcement.
Yeah, that's awesome. I mean, when we look at interest rates, this is one of the major factors when we look at macro factors in Collective Shift. Now, we ourselves are not macro experts, but we do have a macro commentator on the team, and his name is Victor. He likes to cover this a lot for us. And I just wanted to take a very quick short interlude and have a look at the CME FedWatch tool. This is one of the indicators we do use here to have a look at the interest rates and see where they might be going. So we can see very briefly here, in 44 days is when the next interest rate decision will be made. And the market, the collective market in the world, is currently pricing in that there's an 88% chance that the interest rates will not be moving at all. And there's also an 11% chance that it's actually going to be going down by 0.25%. Now, as the date gets closer, you can extrapolate a bit more to see where the ranges may actually fall at the end of the day. So this is still, very early, and 44 days, it may change with any other speech that they come out, either they're hawkish or they're dovish, things will change. But it's still good to keep an eye on this kind of information in the market. So let's go on to leaving the macro space. Let's go on a bit more micro into the crypto market, right? We have had a security incident. And at Collective Shift, we do take security very, very seriously. Please make sure you check out our security center. This specific security incident Nick is going to brush us up on is by Ledger, which is one of the top hardware wallet manufacturers in the world. So Nick, what's the security incident about, and should we really be worried about this now, or is it over?
So it looks like the initial concern was patched. So essentially, there was a employee at Ledger who was phished, and they were sort of, their computer was overtaken, and looks like the hacker was able to push some sort of malicious code into sort of a Ledger kit that they sort of work with other applications or protocols to enable easy access with Ledger devices, the Ledger software, and also these other DeFi applications, or dapps as they're sometimes called. So yeah, this was the Ledger Connect kit, and so essentially this hacker pushed malicious code to that, and then it compromised whoever was using the Ledger Connect kit because they potentially could have fallen victim to this malicious code. So this was all patched, and so at the current standing, that everything looks like it's fine, but it sort of just brings back to looking at Ledger, who have had numerous security breaches and issues in the past. And also this question, I guess, of how could one employee then have such an overwhelming control over how, people interact with different crypto applications. So I think this really was a big issue, and I saw on-chain on crypto Twitter or X, a lot of people were just saying, do not interact with anything until this was fixed. So it brings up a lot of issues, though, because if crypto wants to go, mass market, it seems kind of crazy that this can sort of happen with just one employee that's been compromised.
Yeah, it gets crazy when you think about like the entire company itself. One person gets phished, some socially engineered instance, and all of a sudden people around the world could be losing millions and millions of dollars. It's just crazy. And it goes to show how early the entire space is. That security is still paramount when it comes to this. But Matt and Nick, maybe I want to touch on this because we've had a lot of security issues with Ledger before. I know some of their databases got hacked and emails went sent out. Some poor product choices when it comes to custody and everything. So Matt and Nick, I want to ask you guys: do we think Ledger is still the leader in the hardware space, or should people start considering other hardware wallets?
Yeah, I think they are still the leader. I think their reputation's definitely taken a hit in the past 18 months or so. And even this one on the weekend or late last week, where this was a former employee whose computer was sort of, they hit a phishing link or whatever. So it raises questions like, like why isn't a company as large as Ledger sort of, closing off ex-employees like permissions like as soon as possible, given, and also like how can one person in the company sort of be able to sort of push code like that without it getting verified by someone else in the company? Like that, there's a lot of like, it looks pretty amateur from the outside. Like I'm not too much of a security expert from the technical side of things, but it all does seem operationally pretty amateur given Ledger's value as a company and how much of the crypto, I suppose, users out in the world sort of rely on their hardware being secure. And just on that hardware sort of point, the reason why I still trust Ledger ultimately is that all three of these big incidents over recent years have never really impacted the hardware wallets themselves, but definitely it causes you to question that if the company sort of manufacturing the hardware wallets is so pretty lax with their security practices internally and whatnot, just how much can you trust that the hardware wallets are as good as what they claim them to be in the past 9 or 10 years since they've existed. So yeah, like for me, I'm still happy to use them, but if people are concerned, that you can always use maybe multiple hardware wallets from different companies is always an option if you want to almost diversify yourself. Or obviously there's the other ones like Trezor, which is another really popular hardware wallet. But again, they've had security issues in the past as well. But that was a very long time ago. So yeah, I think overall, just be aware that none of these things are, 100%. But yeah, what are your thoughts there, Nick?
I think it just brings up a really important point that I know even us at Collective Shift, we have a mantra, not your keys, not your coins. But I guess this is an area where it is potentially an issue. And I actually wonder whether, hopefully, where we see more reputable businesses and banks and different companies that will gladly hold your crypto for you, whether that's like Coinbase, who is starting to become, I guess, one of the most trusted custodians of your cryptocurrency, or whether it's honestly just easier for some people just to hold it with these companies rather than having to trust some crypto native security company who has several issues in the past. It's not Ledger's first problem, and it probably won't be their last if you're looking at it objectively. So I'm just wondering whether we might see a pivot then to not always saying not your keys, not your crypto, if we start to have real trusted and guarantees for your cryptocurrency. So I'm kind of wondering that. I have even been rethinking our mantra of not your keys, not your coin sometimes when we're looking at the amount of hacks that can happen in DeFi, or the amount of people that just lose their cryptocurrency in general.
The aim of the game is to try and preserve your capital rather than try and lose it. So if you're a member at the Collective Shift platform, just have a look at some of the hardware staking, guides we have. And maybe this is worth another discussion with the team. Ask us in the Q&A if you're interested. Ask us if you should consider going to a centralized exchange or a centralized custody solution. I'm sure there are out there and they would love your business. So it's worth considering at least so you don't lose your funds, But gentlemen, let's move on from this. Let's go a little bit bigger picture again. Let's go again to the Bitcoin ETF updates. There's a whole bunch of news still going out. I think Gary Gensler has done something, or the SEC has done something. It's changing every single week, and we talk about this every week again. So Matt, what's the update with the ETFs, mate?
Yeah, there's still a lot of reporting on these most days. But again, the high level applicants, even likes of Fidelity, BlackRock, continue to meet with the SEC to discuss the details of their proposed ETFs, which you could view that in two ways. It's either bullish because the SEC is continuing to engage, but it could be bearish in terms of the fact that we're 2 or 3 weeks away from when they're supposedly going to approve them, but they still seem to have all these hang-ups on certain components of these applications. So make of that sort of what you will. I still ultimately believe it'll be approved in early January, but personally, I'm probably a bit more open to the fact that it could be delayed than maybe what I was 2 or 3 weeks ago, just given it's, they're still scrambling to get these details right just ahead of that January 10th sort of date. So yeah, overall, I still expect it to go ahead in Jan 10, approved of basically all of them at once. But yeah, definitely important to keep monitoring these developments over the Christmas period if you're someone who is not a long-term investor. As we've said many times, long-term investor mindset, I don't really think whether it gets approved in early January or if it doesn't, I don't really think it impacts the outlook for Bitcoin that much, to be honest. But it's certainly still at the very, very top of the news sort of funnel, and it's got everyone's attention still in the middle of December.
And Nick, I want to come back to you on this as well. I just want to see if you kind of agree that they all might be approved in January, or are there other kind of institutional companies that are having an impact in this space when it comes to the ETFs? Have you heard anything?
Yeah, I'm probably with Matt in his positioning around that time frame, but I also wouldn't be surprised to see any pushbacks just because it's been a long time coming for these anyway. So when it comes to the SEC and Bitcoin ETFs, I'm definitely not holding my breath.
Yeah.
But I'm just always interested in seeing little bits of news, such as Google, are sort of reworking some of their crypto advertising rules, to really cater for these crypto trusts or crypto ETFs that will, start to be able to be advertised to people that are on, in the Google ecosystem. So it's little small things like this that still need to be worked out really before these go live as well, because it's going to be a race, because they're fundamentally offering the same product, exposure to Bitcoin via an ETF, but it's just a matter of trying to convince a retail buyer that for some reason Fidelity's is better than BlackRock's, or whatnot. So that's one thing I'm actually beginning to think is actually going to be quite a big impact on the ETF market that I didn't really anticipate before, is we're really seeing this new exposure and new advertisements that will really start to be, done, because they have to, I guess, register in the proper ways and have the proper disclosures before that can happen. So yeah, really excited to see things like that happen, and it's a little sign like that it's sort of inevitable at this point. But whether it's Jan 10 or not, at the end of the day, I don't think it really matters too much, as Matt said, in the long term.
Yeah, that's right. We have a more long-term approach here. And Nick, when you said about Fidelity versus BlackRock, so I can just imagine them taking out ads on TV, regular TV, and saying, no, my Bitcoin is better. It's better than that Bitcoin, and mine can do this. Like, oh, Jesus Christ, guys. Just calm down. It's okay. It's just Bitcoin, and some of us have it for a long time now. We've been in the space forever. But let's, and I know to the listeners out there, we do always talk about the United States when it comes to ETFs, even though they are approved in other places around the world. So US is still a major market player, and so we like to keep on track of this for you. But keeping on track with the US, we're talking about Senator Warren now, who's introduced a new bill, which it seems pretty crazy. Senator Warren is a bit controversial when it does come to crypto. So Nick, I think you have the scoop on this. What's Mrs. Elizabeth Warren trying to do now with crypto?
Yeah, so she was very famous for her sort of campaigning. She was always campaigning to create and gather an anti-crypto army. Who was very really trying to install regulations on cryptocurrency in terms of things like anti-money laundering and know your customer regulations. So she introduced this bill to crack down on Bitcoin and crypto. Essentially, it's an anti-money laundering bill that increases the reporting requirements for different node operators. So this can even be in the case of, if you have an Ethereum node, you would be roped into all of this. And it's all about trying to curb the misuse of, crypto and illegal activities. So it's imposing all these stringent know your customer laws, anti-money laws, and extending a lot of, rules relating to bank secrecy that is normally just reserved for banks and traditional assets, but now is looking to extend the scope into cryptocurrency. So this is just a huge deal because it's one of the biggest issues is that this new compliance measures that may be introduced if this went live would actually make a lot of crypto really tough to operate in that framework that she's proposing. So it's a really big deal because regulation is coming, and it's just a matter of how harsh is it and what new obligations will crypto and DeFi and all these different protocols have to do in order to still allow people to use the products. Worth noting, though, that Senator Warren has a pretty poor record of actually passing a lot of this stuff into law. A lot of the stuff she introduces doesn't actually make its way into law, but she's sort of seen as a sort of a shapeshifter of legislation. So from a lot of the ramblings that I'm hearing is that this is sort of worth keeping an eye on. It's unsure exactly whether this is going to pass in its current state because it's very destructive for crypto, so there'd be a lot of pushback. So I don't think it's a case of worrying just yet, but it's definitely something to look forward to because in my analysis of the market, compliance, anti-money laws, know your customer laws, there is a big demand or focus on US regulators to impose similar requirements that banks have to cryptocurrency. So this is a common theme I'm seeing, and I'm only going to expect to see it shift in some way next year. And yeah, it's just going to be a matter of how, stringent these obligations will be.
Yeah, so then Nick, I mean, I know you said she has not a great track record of getting these to actually become laws at the end of the day, but let's take the hypothetical that it does actually pass. Why is this such a big deal then for any retail person in crypto? Is it just going to be a lot harder for us to transact on the chain?
It would be harder to transact, but it would just be that, for example, Uniswap, as a classic example, may not be able to serve US customers because they would have to actually vet who uses, the protocol. Like there'll be, and Uniswap Labs may be liable in that case. So it brings up all these hairy situations. Even Ethereum, if you're a node operator for Ethereum, if this law was to be passed in its, or in its current form, it would make Ethereum node operators have to
collect data, collect personal IDs on everyone.
All this information, which would make that incredibly or nearly impossible to do and to actually enforce. And then that would have a downside effect on Ethereum, I would have thought, because we may see operators in the US have to shut off that would probably be the worst case. So, it has a low tangible impacts on the market.
Very interesting stuff. This is kind of still developing, and I'm sure there'll be more laws that may be even more impactful than this. But as always, we'll keep you guys on track with it. And sticking with the US narrative still, these guys just keep going after crypto, don't they? But this time, I think it's a little bit of better news, Matt. There has been some changes regarding accounting when it comes to crypto. So I think the FASB has a new approach to crypto holdings. Is that right? What's changed?
Yeah, I think we talked about this earlier this year, but I think it's now official that corporations can now recognize changes in the fair value of their cryptocurrency holdings. So this took effect last week. So it will benefit companies that hold cryptocurrency on their balance sheet, such as MicroStrategy, often is one of the largest sort of Bitcoin holders in the world. So yeah, that's essentially it's a nice, I guess it's an appropriate sort of change that is just a more, I suppose, sensible way to report your Bitcoin holdings if you're a company. I personally still don't really see a future where a lot of different companies hold Bitcoin. Like, a lot of them don't really hold many other commodities or stocks, for example. But, if there is going to be an influx of, other MicroStrategy copycats and whatnot, then this definitely would favor them.
Sounds good. And I know this doesn't quite affect Australians because we are primarily an Australian company, though we do serve others outside. But when it comes to tax advice, if you do need a bit of help with that, please do chat to Adrian from Crypto Tax Australia. We do know him personally. He's quite a nice guy, and he helps a lot of our members regarding tax, regarding crypto. So please reach out if you do need some help there. And as always, don't leave it till the last minute when you'll get a bill from the ATO saying, hey, you owe us this amount. No, you need to be on top of it before that. And also stop dejetting, because all of your wallets are very hard to track sometimes. So keep on track. Now, let's move on to some of the last section in the podcast, my friends. When we look at things in the week that we either appreciated or the markets didn't appreciate as much, under and over appreciated. So Matt, I'm going to let you go first. What did you find in the market that you thought people should know about?
Yeah, I think this happened over the weekend, where certain chains, there was a lot of demand for people to what's called inscribe data. So inscribing just artwork or other sort of forms of media into the blockchain itself. We've seen that with Bitcoin ordinals as being one of the themes of 2023 and the big winners, with November and December being one of the largest periods after they sort of burst onto the scene in May. So we've seen copycats like inscribing on different chains. Basically every other blockchain out there has now got inscriptions. And it's a great way, I think, to sort of stress test the chain. There's a lot of speculation in it. They're really just speculative. Like, that's the entire thing. I think that's sort of inspired people to go into these other chains. I think Bitcoin, if they are going to win, Bitcoins will be the ones that sort of win in the long term. But in the meantime, we saw sort of zkSync and Arbitrum, I suppose, become the next target of all of these inscribers out there. And it basically pushed both of the chains to their limits, where there were like partial outages, from my understanding, on Arbitrum 1 and also zkSync. So there's going to be postmortems published in the next few days, so to share what actually happened. But it was a good reminder of just how sort of new, blockchain technology, yes, but then more importantly, these sort of roll-ups and layer 2 solutions, how they're even newer again. So it was a good way to stretch them, and some of them sort of, buckled under all of the transaction activity. But it was something that, I think will be, worth checking out, sort of the pain points and that. And I think it'll really help you sort of assess layer 2s moving in 2024.
Very interesting. When you said the word outage there, I wonder if a few of the people from the Ethereum chain are going to compare that to the Solana outages, and how much they went after Solana in that case, and will they do the same to ETH layer 2s? Very, very interesting. We'll see how the psychology on that does play out. But thanks for sharing that, Matt. Let's go to Nick. Nick, mate, what did you find in the market last week that you think people should really know about?
Yeah, the one that I didn't really see many people talking about was the DTCC, which is the Depository Trust and Clearing Corporation. You may have seen that name thrown around in some of the Bitcoin spot ETF applications and a lot of the tickers involved. They're sort of a name in TradFi. So they closed a deal to acquire a company called zkSync, which is a traditional finance sort of company, but they also have crypto integrations. So they did this purchase, but the thing that really stood out to me was that their mentioning of DeFi by their CEO in reference to why they made the purchase. He said that they're seeking to build, quote, a robust digital asset infrastructure that protects the safety and soundness of financial markets and delivers the enormous promise and potential of institutional DeFi in the coming years. So I thought this was a really interesting quote from a TradFi player and a big name that is eyeing off DeFi, and really positive words to say. So I'm really interested to see what we see come out of this, and it's a real big, another big positive, I think, when we're seeing a lot of names talking about crypto, talking about blockchain, these public blockchains, talking about DeFi, that it's really here to stay, and we're seeing big companies really potentially starting to offer some more DeFi services in the coming years. So really keen to see what happens in this and what shape of we see in the coming maybe 2 years.
Yeah, that's awesome, man. Thanks for sharing. It's always hard to realize, like, you just check your portfolio every single day, but you don't realize there's big institutional players behind the scenes making big moves so that you can actually, check your portfolio and make sure it performs well. So that's interesting, man. So for myself, what I found in the last week was something underappreciated, I think. People didn't notice this as much. Maybe it's because it's a bit newer. So Coinbase actually did announce that they're launching a project called Project Diamond. Now, this does have little connotations to diamond hands. It's got to do a bit about custody, but basically it's a smart contract platform that's really supposed to help institutions create, manage, buy, sell a whole lot of the native digital assets on chain, right? So it's been launched with all of the money Legos they've built before, which is custody, the Web3 wallet they have, USDC stablecoin, and of course, they said their new base chain. So that's the big pickup for me there. This is big news for me because a lot of the ETF applications we discussed previously are very heavily tied to Coinbase custody. So Coinbase is just solidifying its stance as like the premier institutional crypto management service. And I think that's a big deal for some people. You don't see it happening over a short time. This is going to be over a long period of time. So it's something I'm going to keep my eye on, and definitely keep an eye on the base blockchain. And I have to go and experiment there myself. But with that said, that's a wrap for this week, my friends. If you're looking for more insights, make sure you check out our weekly Shift newsletter. It provides free market insights every Friday, and that's Nick and Matt and Ben from the team. They all get together and they try and get some really good content out for you. Subscribe at collectiveshift.io/newsletter. Again, that's collectiveshift.io/newsletter. We will see you next week. And if you've got any questions, put them in the chat below. We'll see you later. Bye for now.